21 cents. That is what this stock costs right now, 21 cents. But here's what nobody is telling you. This company just completed a successful test of a weapon. A real weapon for a real government defense partner. A weapon designed to take down drones in seconds using a laser. And the market that this weapon operates in, projected to be worth over $20 billion by 2030. 20 billion. And this stock is 21 cents. Stay with me. Right now, the biggest threat on modern battlefields is not tanks, not missiles, not soldiers. It is drones, small, fast, cheap, deadly. They can be bought for a few $100s, and they can take down million-dollar equipment. Armies around the world are terrified of them. And right now, governments are spending billions trying to solve one problem. How do you stop a drone? Fast enough, cheaply enough, reliably enough. Most companies are still trying to figure that out. This company already has an answer. And a Tier 1 government defense partner just tested it. The test worked. Now, if you want to find opportunities like this every single week before the crowd, hit subscribe right now. We do this every day. Let's keep going. So what is this company actually doing? They started with one technology. Blue lasers. Not the red lasers you see in movies. Blue lasers. A completely different wavelength. More powerful, more precise, more efficient. Used in EV battery manufacturing, medical devices, cell phone components, but then something shifted. The company pivoted hard into defense. They acquired a European defense tech firm focused on exactly one thing: counter-drone systems, directed energy weapons. In simple terms, a portable laser device that can blind, disrupt, or destroy a drone before it reaches its target. This is not science fiction. This is already in prototype testing, with real government partners on the ground right now. And here is where it gets serious. That subsidiary received an initial deployment order from a Tier 1 government defense electronics partner. $250,000. Their first real revenue from this technology. First real revenue. And it just happened in March 2026. Now let's talk about the balance sheet, because this is where people get surprised. The company raised $12 million in fresh capital. They reduced $17 million of legacy debt, and they currently have approximately $24 million in cash. Management has publicly stated they expect to reach positive shareholders' equity in the second quarter of 2026. That is right now. A company cleaning up its balance sheet, raising capital, generating first revenue from a defense weapon, and sitting in the middle of a $20 billion market, and there's more coming. The company is in the process of acquiring a defense and security technology firm in Italy. That acquisition, once approved, expands their European defense footprint overnight. New clients, new contracts, new revenue streams. The regulatory filing was submitted in April 2026. And then there is the earnings report, coming May 18th, after restructuring, after raising capital. After their first deployment order, that report could tell a very different story. Now, I have to be completely honest, because this channel never hides what is real. This is one of the highest risk stocks we have ever covered. 21 cents, microcap, history of dilution. Went through a reverse stock split, still pre-revenue at scale. This is not for everyone. You must do your own research. Read every filing, understand every risk. Never invest money you cannot afford to lose, but step back for 1 second and look at the full picture. A laser weapon that stops drones, already tested successfully. First deployment order, already received. $24 million in cash, already secured. $17 million in debt, already eliminated. A European acquisition, already filed for approval. Earnings, coming in May. And a $20 billion market, waiting ahead. All of that in a company that most people will never look at because of one number. 21 cents. And now you have waited long enough. The company is Nuburu Incorporated. Ticker, Buru. Trading on the NYSE American Exchange. Current price, 21 cents per share. Their 52-week high, $4.24. That means at its peak this past year, this stock traded at 20 times today's price. 20 times. Now it sits at 21 cents. Same technology, same defense partner, same laser weapon. But now, with first revenue, with cash in the bank, with debt removed. The company that existed at $4 was weaker than the company that exists today at 21 cents. Let that land. A 21-cent stock. They will laugh at it, ignore it. And then one day, after the contracts come in, after revenues scale, they will look back. The question is not whether this stock is risky. It is. The question is whether the story behind it is bigger than the price tag. You already know what I think. Now it is your turn to decide. If this breakdown gave you something to think about, hit subscribe. Drop a comment below. What is your target price on Boru? We read every single one. We do this every day. New stock, new analysis, same mission. See you tomorrow. This video is for educational purposes only, not financial advice. Boru is an extremely high-risk microcap stock. You could lose your entire investment.